Hey traders, Brian here with a new template that I'm using that's really helped me out a lot. It's I've incorporated just some really neat levels that put a lot of context around the market's movement. And I just wanted to bring this to you, so in case you wanted to use some of these ideas here, maybe to help yourself out. By all means, just more ideas. So anyway, this is the complete chart right here that you're seeing. This is the NASDAQ. It's my higher time frame. It's 36.6. And again, I take all my setups from the higher time frame. Nothing has changed. I'm still using the John Wicks, the B4 jiggles, and the trigger line pullbacks. But now I'm just waiting on these setups around the key levels, and it's really improved my consistency here since I've started using this. So this is the all-inclusive chart. I'm going to walk you through it, and then we're going to peel off a few things so I can show you how to input some of the data and what's available. Okay, first off, we're going to get the lower pane. This is just an RSI that I have. I use as a trend filter. You can kind of see how I use this, how you can use it, I should say, is let's say that we break through the 60 level here. We're in a bullish mode. As long as it doesn't cross back below the 40 level, we're in bullish mode. It confirms all these movements here and never breaks below the 40 here. Deeper sweep and up she goes. Okay, so it stays bullish, confirms everything. It's just a confirmation tool. Here you can see we get the down push through 40, bearish trend starts, bearish pullback, and it doesn't crack the 60, so we're good to go. Pullbacks, you're just taking those pullbacks as long as it doesn't breach the opposite threshold. Okay, just real simple stuff. I'm going to close this down so it doesn't get in the way of what we're talking about. All right, so what you see here is disregard these levels at top. These are my opposing levels. I just moved them all to the top so they wouldn't be in the way. You have to be a Algo Day Trader subscriber to get those. But what I have here is I've got markers calculating most of these levels for me. All right, so the first levels you see is this is the session high blue, session low red, and midpoint for session high, session low is this gold yellow solid line here. Okay, so that's the midpoint. Now I have this is part of the Murray math model for levels. So it takes session high, session low, generates a midpoint, what I refer to as halfback, and then it calculates the channels. The bullish channel is the black. Anything above that, it just calculates a percentage. Murray math is built off of a range, and it breaks it down into 1/8 different levels. So 1/8, quarter, so and so forth. 4/8 is a half, 5/8, so forth, and he just breaks the trading range down. He has a specific way to trade those things, or the book I read, I think I still have it, from about 15 years ago. But I just use the upper boundary, and I calculate, I create a channel. So it's off of the high. So anything in this area here, when I get a setup, a bullish setup, I want to take it inside that. So, here we screech above, we're in above the channel, we come back, you could take that B4 jiggle, you could take that deeper B4 jiggle, you could take that. Okay, so that's one way of using this Murray math lines, the channels, in your trading here. The other way I really like to use it are the failures. So I much prefer to see it break out of the channel and then for me to get a setup. This is a valid setup. First pullback outside of the channel going down, you got this one. Okay. we make a higher high, we break that swing, so I'm very suspect of this. But we touch the level again, we come down, you get a couple of little, they're scrunched up, you get a couple of John Wicks, but those are, you can take those. First setup that I like, a John Wick, a B4 jiggle, or a trigger line trade on the lower side of one of these channels is what I'm looking for. Same here, I would have taken this. Again, it's scrunched up right there. I'm going to open this up a little bit as we move on. I just want to give you some basic guidelines. I would have taken that and would have probably stopped out for a loss. But here's one. We wrestle around. We get a John Wick right in there underneath these trigger lines for a nice trade. This John Wick could have taken that. This B4 jiggle could have taken that. Okay, so that's how I use the bullish channels on the upside. Now the bearish channels are the yellow lines. So anything from this thick yellow line down to the low, any setups I get inside of those, I want to take those to the short side. I'll show you some examples as we move forward, but well, let's see, might have one or two. Yeah, here we go. All right, so we break down here and get the trigger line trade, closes back down below the channels. That's valid. Okay, trigger line trade closes below that channel, valid. Lower high, valid. Lower high, valid. Same thing here. We break above, so I'm kind of leery on this one right here. But here's a clean way of looking at out. We're below the bearish channels, we break above, and we get to pull back into the trigger lines slightly outside, and then we up close. I want to take those trades every time. Just like over here, you want to take this trade every time. This trade every time. The first pullback setup we get, breaking down below those. That's kind of what we're looking for. Here was a beautiful John Wick. Here was a trade I would have taken, probably would not have worked out, but anyway, we want to take those. Okay, so that's the Merry Math template portion of this template. So again, bearish are the yellow channels, bullish channels are the black lines, session high, session low, half back. Okay, so another component of this is what I call the Larry Williams breakout module. So 15, 20 years ago, longer, 25 years ago, when I had TradeStation and Larry Williams was in his prime, dominating, some of the day trading championships and everything, the core of his methodology was he used a couple of things, but his breakout, open range breakout was the core of what he did. So I'd run a lot of models in TradeStation, trying to mimic his open range breakout, and they're over time they're still valid. I mean, they are. Everybody says they're not valid anymore because of Globex, but yeah, I disagree. I still think they're valid, and I think if you start plotting these things, you'll see the validity of them. All right, so this dash line is Globex open. Okay, that's the midpoint between the Larry Williams breakout on the upper side and the Larry Williams breakout on the lower side. All right, so you can see here this, it stopped it to a T there and just washes around. So inside of this, we're looking at the channels and taking our setups. But let's go back here and take a look at some of the breakdowns. You can see here it stopped it to a T. It eventually broke down. You had a nice runner right there, 15, 20 points straight down. You broke it again, had a nice setup over here, and a nice setup right there underneath that line, coinciding with the channels. Now again, I'm just giving you some rules. I'm going to open this up so you can see it a little better. But again, how I calculate these levels is the first thing I do is you can use whatever platform you can trade. You can use your Ninja Trader. I just use an Intraday model for the NASDAQ. This works in the S&Ps too. Probably works for everything else. You just have to try it and see. Again, it's not a curve fitted type of strategy. So what I do is I run an average true range. I just set it at 9 days, again, because I'm a fanatic over 3, 6, and 9. I just set it at 9 days. I don't think it makes too much difference. I think Larry ran 10 or 14 or something, whatever the default was. I think that's what he ran. He may have tweaked it a little bit, but anyway, I'm sticking with 9. 9 days. So what I do is you look here on the indicator, and if you look over in this corner, you'll see I've got the cursor over that. Now I'm trying to figure to just imagine for a second that the market is just opened up. This is the start of Globex is over here in this area for today. Today is the 10th of September. Okay, so this is the evening of the 9th, and of course midnight flops over, it's the 10th. So just so you can get set. So this is full on trading day of the 8th and 9th. It closes on the 9th. Here we open Globex on the 9th. We're closing on the 10th. Okay, hopefully I haven't confused anybody. So I'm just looking at this day, the day prior to the Globex open, and looking over here, and I see that the average true range for the last 9 days is 424 handles. Okay, so all I do is I use 21%. Again, I'm fanatic over 3, 6, and 9, so 2 plus 1 is 3 for the root. So I think Larry, in the day, Larry did a lot of experimenting, but his success was 20-some% of the average true range. There were some times he would use 30 and 35. He really wanted strong breakouts for what he was doing. And hopefully you guys know who Larry Williams is. If you don't, he's got the world's record for Robbins Trading Cup. 10,000 into 1 point whatever that was, 1.1 million. He was actually up over 2 million, and he lost. I think he lost close to $1 million in one day. Don't quote me on that, but I know he had one really, really bad day in that right there. But he completely spanked that, and of course, 10 years later, his daughter won the championship as well. So using similar methods. So anyway, we got 424, and we're going to take 21% of that 424, and we're going to add it and subtract it to the Globex Open. That's it. Generator levels. Okay? So that's how we get that. Now let's open this thing up a little bit, and then I'm going to show you how to use the markers. Show you this one really good example today of how level to level this stuff works here. All right, here you go. I forgot to tell you, I've got the VWAP plotted in here too. That's the black and white dashed line. That's the VWAP. Okay. So here we had some really good trading. I was already done for the day, but we break out below the bullish channels. We get a John Wick there. If you're, I didn't really talk about this. Most everybody that's watching this know that this is my trigger lines, BLT trigger lines. So if you didn't want to take this trade, I'm more apt to take this trade, even if this is bullish and we're falling out. I'll take this bearish John Wick down. If you don't take that one, here's the classic, my favorite, right underneath the trigger lines. So you take that underneath, and then you got a full B4 jiggle, the first one underneath the trigger lines. You could take that. All right, we got enough room. We go into the Globex Open, and the VWAP, and you get another B4 jiggle. This is the one I would wait for. If this one failed right here, beautiful short down right there, and we go right into halfback. You see here it wiggles a little bit of halfback and then just collapses. Okay, so I'm done at that point. One of those trades is all I really need. It's all I'm really looking for. One of those series right there. I'm not trading every one of those. All right, then we get into the Larry Williams breakout, which is right above the bearish channels, and swoosh, there she goes. That's about 20 handles right there to the downside or more. But you get the beautiful inside the channel rally back, and you close back down below this channel. First little wiggle and beautiful trade to the downside. Doesn't even buckle at all. So you would have had really nice, any profit target you were shooting for, you would have gotten into that one. All right, so we meander about here. You also got a nice little John Wick inside this right here. I would have, if I was still trading, I would definitely take that. That's a perfect spot for me to take a John Wick. And it's also underneath inside the bearish channels. So beautiful trade. All right. If I'm aggressive and I'm trading, you know I like these John Wicks above the trigger lines, and it's also above the Murray math lines. I'm looking for that. And, you know, I'm also looking to get back inside, potentially get back inside the Larry Williams level here. There's a possibility. There are several reasons why today at this level I would be looking for this to get back inside the levels. I can't really go into that now. It's very subjective. But anyway, here's a beautiful trade up, kissing the Murray math line. I mean, to the tick. We got a bullish trigger line, and up she goes. Okay, multiple chances to get in on the trade. If you miss this, you got the John Wicks. So that's what I'm looking for right there. Those are just some really, really good trades. Now here we go. We break through, you know, a buy stop above that. If you're a breakout trader taking the, you know, Larry Williams was just buying these things on the breakouts with big stops on his primarily trading S&Ps and bonds when he won the championships. So good move up, at least 15 handles without even a buckle right there. Comes back down to test. This is the trade I'm really looking for if I'm still trading, the test and the close back up. And there you go. We come back again, we go slightly through it, but we close up. Valid trade to take, and you got it. Higher low. You take it, you wouldn't have gotten much. I would have probably lost money on that trade the way I trade. But you test it again to the tick, and a little bit of jiggles, but up, and away she goes. Okay? So that's how I use these levels right here. And like I said, they really help me on my consistency quite a bit. All right, now how do I calculate all of these levels? Well, the Murray math model it calculates on its own by itself. You don't have to do anything inside the template. It's turnkey operation. But for the Larry Williams model, because we have to do a little math, here's how I do this. All right, so in the markers template, I've got the Globex open, the Larry Williams bull breakout, Larry Williams bear breakout. All right, the Globex open, the GL open, that is my variable that calculates the levels. You don't have to do anything to that. What you'd have to do is come in here every evening, you know, right before Globex opens up, or after, whenever, and you just have to change these numbers in here. So you don't have to change 21. You're just looking to input the average true range number. That whatever average true range you like, then you put that in there. It'll calculate it all for you. That's it. You just type this in. Let's just say I was coming in yesterday. 424 was my, and again just to refresh you on where I've got 424. Here I am, Globex opens here. I'm over here this day, the day prior, and I'm looking in this column to see that, okay, 424 is my 9-day average true range. All right, so I'm just putting 424 in there. That's all I do. I do go to the bear breakout. I do the same thing. I put the 424 in there. Now it's different every day, so you got to go in there. But other than that, that's it. And then you just hit OK, and it calculates everything for you. You can change the colors on it, to your liking, to your preference. You see here, she's calculating out. And there we go. Okay, so that's it. And hopefully, if you like these levels, it looks like they might give you a slight edge. They certainly do me, but whatever levels you gravitate toward, that is what you should continue to use. But anyway, I just wanted to offer these up because really neat. I like them, and they've really helped me out. Okay. Good luck to you in your trading, and we'll catch you later.